Hey everybody, it's Chuck Barone here. Today is Thursday, August the 31st, 2023. End of August, end of summer, Labor Day coming up this weekend. We're off and running toward the holidays, guys. It's going to be here before you know it. Interesting day today in these markets. A lot to talk about, but before I get rolling, of course, let me welcome everybody to the show. And as always, thank you guys for your support. You guys showing up every day and watching these videos, keeping us going every day. We appreciate you guys. All right, so let's talk about these markets today because there's a lot I want to touch on today. Markets mixed today, not really reacting the way I thought they would to what I think is a pretty crappy inflation number. So we knew we were going to get big data starting today. For the most part today, the markets were above. We're in the green. We'll talk about this PCE number. We'll talk about the jobs that came in today. But the market not really reacting much to it. I guess they're going to hang their hat on this jobs tomorrow. You know, the non-farm payroll. How many jobs do we create in August? You know, they're shrugging this inflation number off like it just wasn't even reported. Anyway, so the markets today. So let's look at this. The Dow gives back some of the gains it's had, minus 168 points dropping today. 34,721 on the Dow. The S&P down just 7 points. 4,507 on the S&P. And the NASDAQ manages to squeak out a small gain, up 15 points on the NASDAQ. 14,034 points on the NASDAQ exchange. So stock market today, not much of a day really. You know, when you look at this percentage-wise, it's just minuscule. I think the market the news today that I'm going to talk about is not great news. But the markets holding out their hat, holding out their hope, holding out every little bit they got for good reports tomorrow and something they could take a positive from. So the markets today mixed. Tomorrow is going to be a big day. Let's see how markets react to news tomorrow. Bond yields today. Another weird day in the bond market. Kind of a nice quiet day though. Surprising considering these inflation numbers, but the 10-year actually falls 3 basis points, sitting at 4.09%. The 2-year falls just 1 basis point, sitting at 4.87%. So not much activity in the bond market today. In spite of these inflation numbers, a big dollar rally today helps bonds too. Dollar comes up big today, back above 103.5, 103.64 on the index. It looked like it was going to fall under 103 yesterday. Nope, rallies right back up today. Dollar's still looking strong. Of course, strong dollar puts big pressure on gold and silver, but not much today. Gold just falling $2.80. to $1,939.20 on the gold for an ounce of gold. Silver falling 20 cents, $24.40 for an ounce of silver. So, you know, metal's still holding their own in spite of this strong dollar. You know, I think that prices for gold and silver right now are kind of really where they should be. They're holding up pretty strongly in spite of a lot of resistance. And we know there's probably organized resistance to gold and silver going up too high. So looking decent in spite of this strong dollar. Oil today has another good day, man. Oil jumping $1.93 for barrel, now sitting at $83.56 for a barrel of West Texas Intermediate. I want to see now, you know, we're going to start looking a little more closely at oil because it's been out of its trading range for a little bit now. We're going to see if we have to make an adjustment. I'm kind of not really seeing any real indication that there's going to be a big crimp in supply or a big surge in demand. You know, China buying their oil off market from the Russians, and their demand, their economy looking pretty crappy. I'm guessing demand will not be super robust in China. Here in the U.S., we're getting past our summer season where the air conditioners run. We're getting past our summer season where everybody's driving, you know, vacation time. So I don't see super high demand here in the U.S. either. So let's see what's going to hold these oil prices up. Bitcoin today down pretty dramatically, down $1,137, sitting at 26,139. Looks like there's a little bit of uncertainty now in Bitcoin. No real news that I saw today to drive prices down like this, but probably some profit taking. Had a pretty nice couple-day run up there. So I'm sure some Bitcoin investors taking a little bit of money out, looking to buy again when it's cheaper. Probably going to get away with it too. All right, so let's talk about news today, because there's a lot of stuff I want to touch on today. But first and most important, the Fed's PCE index, the Personal Consumption Expenditures Index. This is the preferred gauge of inflation that the Fed uses. They prefer this over CPI and PPI. Anyway, numbers coming in pretty shitty, if you ask me. Top line coming in 3.3%. Core numbers coming in 4.2%. Does any of that sound like 2% to you? Not me. Now this is really the bad part. The top line now sitting at 3.3 was 3.0 last month. So inflation again ticking up this month. Core sitting at 4.2 was 4.1 last month. So core inflation, even throwing out energy and food, ticking up. So these inflation numbers, in spite of all this happy talk, the fight is over, soft landing, you know, all these euphemisms you hear, the bottom line is for the last 2 months, you know, inflation, these numbers are not 9%, but they're moving in the wrong direction. Now, I was shocked last month when the numbers were higher, that the market didn't react to it in really any meaningful way. Again today, numbers higher. They're talking about, well, you know, the inflation numbers are pretty modest. No, they're going up. They're moving away from the target, not toward it. So they can try and spin this any frickin' way they want, right? And the markets are obviously choosing to just shrug this off completely. And what they're hoping for is a favorable jobs report tomorrow. I don't know, guys. Inflation now, you know, we've been telling you guys for a long time this fight is going to take a lot longer than they're saying. It's going to be a lot tougher to finish the job than they're saying. And we're going to be right on this. The savings rate in the U.S. this month falls to 3.5%, down from 4.1% just last month. You got consumers being stretched now, and I don't care what they say, these numbers they're crappy. Would you be happy with only a 4% jump in, you know, one of your expenses, or only a 3% jump in food prices? Well, compared to 9, yeah, but not compared to 0, not compared to 2, and numbers rising, not falling. At the same time, Now we know yesterday I was talking about delinquencies spiking on car payments, delinquencies spiking on mortgages, delinquencies spiking on friggin' everything, right? Credit card debt, boom, 1 trillion. Obviously delinquencies spiking. I talked about this phenomenon of taking consolidation loans, home equity loans, to tap into and pay these credit cards off, and then just using them right back up to charge stuff up at the same time. Well, all that being confirmed, because today we got the report, consumer spending soared almost 1% just last month. That's a 12% annual rate. It's unsustainable. Where are consumers getting this money from? I mean, wages have been trickling up, but not for to show this kind of sales jump. So again, schizophrenia in these markets. You got, you know, consumers, more people being reported delinquent in payments. At the same time, consumers spending money like crazy. At the same time, now we've topped $1 trillion in credit card debt at an average of 25% interest. So we're paying $250 billion a year just in interest on credit cards. Not great. Not great. GDP report comes out today. GDP's now locked in 2.1%, revised down from 2.4% for the second quarter. Typical U.S. growth, 2 to 3%. That's where we've been. And their downward revision is disappointing. We'll see how it comes for the third quarter. The Atlanta GDP Now tracker showing more than 5%. I don't know if that's going to be what the final number looks like, but it would sure be a shock. Jobless claims, you know, that's every Thursday. Jobless claims come out. That's been closely watched by the Fed. We've talked about it numerous times on this show. Well, jobless claims falling 4,000 this week, down to 228,000 from 232 last week. Forecasters had called for 235,000. So numbers coming in a little bit better for the jobless. You know, this is not exactly the number the Fed was looking for, and it'll be interesting to see tomorrow when these jobs numbers come out. I'll be up at 5:30 in the morning waiting for the number to see where it comes in. So yeah, jobless claims falling. Now listen to this, guys. I was reading this article today. 63% of Americans, the highest number ever now, cannot handle a $500 emergency. 63% of Americans do not have $500 in savings. 35% of people making more than $100,000 a year are now living paycheck to paycheck. They're doing something wrong, guys. It's debt that's choking off these consumers, choking off even wealthier consumers. Now everybody up to eyeballs. You got late payments jumping, delinquencies jumping, consumers raiding 401ks and IRAs to pay bills, borrowing money. So what they do is they use their credit cards. When the credit cards get close to maxed out, they hit up a retirement account, pay taxes and penalties, pay their credit cards down, start the cycle all over again. It's friggin' nuts, man. Nuts. Nuts, nuts, nuts. Next is going to be home equity. You'll see them come raiding home equity to keep this lifestyle going. Actually, I read a really interesting Reuters article today saying U.S. homeowners are sitting on $28 trillion of home equity. I don't know where they're getting this number from, because that works out to an average of about $335,000 in equity for every owner-occupied house in America. You think that's true? I don't know. Now, the problem with this, $28 trillion in equity, even if it was $2 trillion, tough to get to. Not like going to your savings account or your money market or, you know, something that's liquid. To tap into home equity, you either have to finance it, home equity loan, refining your first mortgage, which most people don't want to do right now, or you have to sell the house, buy another one, which again, most people don't want to do right now. You got mortgage rates sitting at 7 to 7.5%, depending on your credit and where you are. Most people locked in mortgages in the low 3s. Who would give that up to trade for a higher, so much higher, 7% mortgage? So this $28 trillion is just sitting there locked up. I'm guessing the vast majority of that money is wealthy people who don't need to tap into home equity. But that's an astonishing number, $28 trillion, especially with the savings rate falling so hard. Americans in debt up to their eyeballs, and to be sitting on a pile of money like that, with barely any access to it. Well, maybe that's why the money's there, though, is because there's really not much access to it. Fascinating stuff, guys. And tomorrow we're going to finish up this week. We're going to get the jobs data tomorrow. Non-farm payrolls is what they call it. Basically what it is how many jobs were created in the U.S. in August. They're expecting 170,000 to be the number. That's down from 187,000 last month. It had been well over 300,000. So we'll see. ADP forecasting 177,000. They are usually way higher than the total number. We'll see if they're even remotely close this time. But it's going to be a fascinating number because the Fed's shrugging off these inflation numbers like they're not so bad in hopes that they're going to get a good jobs number tomorrow. And by a good jobs number, I mean lower, not higher, because they're going in for this whole soft landing, no more hikes needed kind of language. I got to see it to believe it, guys. Got to see it to believe it. Anyway, we'll be here tomorrow to wrap the week up. It should be a doozy. In the meantime, take care of yourselves this evening. Have a great night. I got a big birthday party to go to tonight, so I will be back tomorrow to give you the news you need. Please, if you could, if you like what you're hearing, please hit the like button. It changes the algorithms around, helps get our video out in front of some more people, helps get, you know, more views for us, which we would appreciate. As always, hit me up in the comments, questions, anything I can do. We'll be back tomorrow. Bring you guys the news you need. Until then, guys, take care. Thanks.